right, thanks, Mom. That's enough with the guitar solo. But thank you for playing for us today. Hey, good morning to everybody. Yeah, Marina's killing it on Bitcoin. Hey, also, it's a monthly S2. You have WS2. It's also a monthly S2. So we can cover that. Hey, isn't it amazing? Bitcoin went from 60,000 down to what? 37? 65,000 down to 37. Huh. Store of value. But anyways, I have nothing against Bitcoin. I love it. It's great. Cool. So anyways, hey, good morning. Welcome. It is Wednesday, 8:15 in the a.m. New York time. About 90 minutes, about 75 minutes before the stock market opens. Everything's been fantastic, huh? Every day I see the stock market down and I smile at my wife and she smiles back. That's great. Awesome. Love it, because then you can buy it cheaper. So you just have to have a plan. So I have a plan, so I'm pretty happy with that. So good morning. I hope you have a plan too. I hope everything's going well. Are you guys killing it? Yesterday, 3 or 4 people said that they got their first 1,000, 2,000, 3,000 pip portfolios, pip trades. That's pretty cool. You're getting there. Hey, Gary, still haven't received my invitation. St. Lucia, hang out with you and everybody else. Hey, I'm ready to travel. I like me in the Caribbean. The only thing is I'm too white and I'm too fat, so I'd have to do something about that. They're like, what's that shiny thing on the beach? Like, I think that's Wayne. Really? It's like glowing. Oh, you made him mad. He's turning red. What is that out there? Someone brought their hot water heater. That's me, man. I got a body like a hot water heater. That's what I look like with my shirt off. Tankless, though, of course. So anyways, let's get on with it. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk when you cannot afford to lose. Yeah, right, Joseph? Who brought the snowman to the beach? That's crazy. What's... I got to do something about it, huh? I look a little pink, I suppose. It's funny when I put my feet in the water, it just turns like just pure white. White as the driven snow. Anyways, good morning, everybody. My name is Wayne McDonald. I'm a currency trader. I'm in love with currency trading. I've been doing this now for 20-something years. It's cool, man. I'm still fascinated and intrigued. Here's what I tell people. You simply have to know everything in the world. Okay? Politics going on in China? Yeah. Oh my God. They're going to clamp down on cryptocurrencies? Boom. That moves. Wow, there's airstrikes in Israel? Boom. Right? It all matters. So you have to know absolutely everything in the world, and I like that. And you have to accurately predict the future every single day. So I like that challenge. It's intriguing, it's intellectual, and if you get it right, it pays too much. Oh, but my taxes will go up. That's a good problem, son. So anyways, glad that you're here. Glad that you're on this journey with me. I learned a long time ago that doing this by yourself is a lonely venture, and it actually becomes a risk. because you're impacted emotionally and psychologically. So it's really good to have you in my life. I appreciate you and the positive energy that you bring every day. So welcome to my office. If you have questions, please ask. But my goal here is to teach you how to plan your trades in advance using technical and fundamental analysis. So let me know how I can help. In the description below this video, there are links to my book, links to FX Bootcamp, my training community. So there's training courses, 30, 40, 50 hours of training courses. There's two live groups, 2 live crews. So there's lots going on there. There's lots of modes. If you prefer to read, just do the book. If you prefer to watch videos, do the courses. If you prefer to learn one on some, then do the courses and upgrade your account to that. If you need a broker that you trust, imagine one day you're going to have to put real money somewhere and then trade the real money. Trust is things like, will they execute your trades or are they B-booking you? Do you know what B-booking means? Many brokers, they don't actually execute your trades into the interbanking system. They're like, oh, they're a bunch of amateur traders. They're going to blow up their account. So we'll just hold their money until they lose it all, and then we'll just keep it. That's an industry standard. Their standard practice. Now, I don't control Trader's Way, and I can't see what they do, but early on in our relationship, right, what I saw was the Swiss National Bank lied to the world, and the markets just went ape crazy, and in an instant, FXCM USA went out of business and owed something like $500 million. Alpari International went out of business, just went out of business. So what do you mean out of business? Well, how do you, right? So I contact Trader's Way immediately, and I'm like, what's going on? Are you guys okay? And they're like, okay, yeah, we're fine. We don't hold, like, we have executed all the trades. So yeah, it might be bad for our customers, but we're not going to go out of business as a broker because all we do is execute trades. We don't actually trade against our clients. I'm like, really? So that's how they earn my loyalty and respect very early on in our relationship. Yes, spreads are great. Yes, execution speed is awesome. That kind of stuff. Customer service, great. But that one moment in time, I'm like, I love these guys. That right then and there. Okay? So that's what did it for me. So thank you very much, Trader's Way. And if you also like that idea, tradersway.com, open up a demo account today. Mr. Kennedy says, isn't that what all brokerages do? Yeah, probably, yeah. Okay. And once again, I'm not in the cool kids club where I sit around and talk business strategy, with the executive team and owners of Trader's Way. That's not what I do. But that's just my personal experience. This was not long after the financial crisis. We had just gotten out of that. And I remember what happened. When it happened, okay, I think I had 2 mini lots on a FXCM account. I don't even remember why I took it. I think it was like a coaching thing. And I had forgotten about these things. And I had like, I don't know, $5,000 in the account or something. Honestly, I don't remember. But I remember the 2 mini lots took out the whole $5,000. And you're like, what the how is that even possible? Oh, you lost thousands and thousands and thousands and thousands and thousands and thousands of pips instantly. I'm like, what? Right? Because there was no other side, and that whole thing collapsed and FXCM went out of business. Now, if my trades are in the interbanking system, literally for like a month, the account was just frozen. Nothing was even moving. Like it was really a strange, bizarro, topsy-turvy world. And luckily it was no big deal. If it was, if it was a big account, oh my God, right? Like, holy crap. So it scared the crap out of me. I remember I sat on the deck. I went upside and I'm like, I need to be outside. And I got sun on my face, and I sat on the deck, like not on a chair on the deck. I just sat with my back to the bricks, And I thought, holy crap, this is going to take the entire global system down. We had just gotten out of the frozen liquidity banking system of the financial crisis. I'm like, this is going to pull people under. So I started calling people in other countries that I know in the Forex world. And I'm like, how you guys doing? How's your broker? Have you talked to them? That kind of stuff. It was pretty serious. I'm telling you, it was really serious. So it frazzled me. I thought this is going to take the whole system down big time. And, well, it took several Forex brokers out of the business. Okay. So anyways, that's how I got where I got on that point. All right, good. All right. So here we are. There's the 200 EMA that we talked about yesterday. Now we're at this 38 to 40 section. So do what you got to do. Now, if you change this to Confluence, okay, you'll see the number here. Okay, that's the extreme low for the month. Okay, so that doesn't mean anything. It doesn't mean buy, but Marina took profit right in here, and you'll see why she did. Okay, what do you think? I think if you did some research, you'll find that Elon Musk was buying Bitcoin here, made $100 million profit here, and we're right back. And people seem to not have a problem with that. I don't know if it's true. Elon Musk and I don't hang out. But the conspiracy theorist in me, which I don't really have much of one, I'm very skeptical of what he's been doing. So I wouldn't be shocked if this whole thing was manufactured. Now, the funny thing is, like, when I listen to like financial podcasts and stuff, you hear of billion-dollar funds, buying Bitcoin here, and it's going to 100,000 by the end of the year and all that kind of stuff. So I don't know if that's still true or not, if people still think that. I think there could be some professionals here. Remember, just because they're professionals, I guess the word professional, I shouldn't use that. Institutional investors, how about that? I think there's some institutional investors that have a lot of money and don't know what the hell they're doing. And I wouldn't be surprised if some big moneyed folks lost some big money. So anyways, so we went from 65, we'll call that 35. It's 37 or something. So now that we've given half of it back, now what do you do? And so this could be a number you play with. Just be cautious. But it's a daily 200, lots of technicians and many different types of markets use the 200 EMA. You might want to check the 200 SMA, which is probably just a little bit lower. You're at a take profit for bears zone. I wouldn't make too much of this quite yet, unless you got something like this. Okay. So it's just, this is a technically important price level, and you do whatever you want to do. Mr. Kennedy says, don't forget George Soros. That guy bankrupted a nation to make $1 billion. He didn't bankrupt the United Kingdom. But he did force the Bank of England to change a policy. There's a big difference, bro. He didn't bankrupt the UK. Now, I think he bankrupted North Korea. Oh, you're talking about Thailand? Oh, wow. Yeah, you think I'm skeptical of big government? How about big government run by a military, or government run by um, a monarchy? Skeptical even more, maybe. Hey, I love you too, man. Love, love, love. Okay. Love, love, love. I'm really looking for, like, I spend a lot of time thinking about 5 and 10 years from now. You guys will be working with me, and we'll be doing some really cool, fun things. And I imagine the love will be flowing there at that time too. I'm looking forward to, you know, let's fly around in helicopters together. You know, that kind of stuff. Like, let's have some fun. Okay. So I don't know what you do with Bitcoin. It's going to be your opinion here. But if you were looking for key prices based on technical analysis, this is a key price. This is a key price. Okay. This is a key price. This is a key price. So, I don't know, wake up and smell the concrete, right? Cuban coffee. That sounds good. Maida, do you put sugar in Cuban coffee? Like, maybe not you, but what's the standard recipe? Yeah, all right. So I want mine with no sugar. Same thing with Turkish coffee. I'm like, I like Turkish coffee a lot, but I'm like, no sugar, please. Wait, can you tell me your opinion about a unified minimum wage across Eurozone? That would be anti-capitalist, and even as an economist, I can't imagine why that would be good. So in the live group on Thursday, one of the things we talked about was changes in Poland, for example. We talked a little bit about the Ukraine. We talked, and this had to do with iron ore and coal and steel production from that, and other metal production coming out of that part of the world, out of Eastern Europe. And then that just led to a general discussion about the economies in general and how things have changed over the last 20 years. And when the EU first got together, the French were worried about losing their cushy little jobs where they had to work, 22 hours a week every 3 weeks, with 17 weeks of holiday. And right, pretty soon you're like, wow, there's hardly any days you actually work in France. And then you find out, well, if you actually have to go to work that day, you just strike, right? So we were joking about that. But at the time, it was like there were people in Poland, for example, big country with a huge labor force, that were essentially dirt poor compared to Western Europe, right? So an economist or a capitalist would say, well, the French are very unproductive because they're all sitting on government jobs, right? Why don't you just take those unproductive workers, right? Move the factory to Poland. The Poles they're going to scramble for the jobs. They're like, oh my God, you're going to open a factory here? Awesome. We got people. We want to work. Let's go, right? Let's make some shoes, baby, right? So that's how capitalism and capital, you're supposed to have the free flow of capital to go there, because they have a lower steady state and there's some catch-up productivity that needs to happen. Therefore, any foreign direct investment is going to have a higher rate of growth, productivity, and return. It just makes sense to a capitalist to say, well, I can build a factory more quickly and more cheaply in Poland than I can in France because there's less government regulation. So let's build it there. And there's lots of workers that actually want to work. So let's build it in Poland and then sell the shoes. Okay? Throughout Western Europe. And we're talking about how that's needed. Now, if everybody in the European Union made the same amount of money, it makes no sense. It just doesn't make any sense. Because now you're like, well, what's the like, I don't know, like it really complicates things. You're supposed to have differences. Okay? So if you go back 30 years when well, actually I did some research. And so, like in the Ukraine, the GNI, the gross domestic GDI, and a gross domestic income, gross national income. Gross national income of the Ukraine is $14,000 a year. Okay. So it makes sense if I hire people in the Ukraine, they could do good work and it'll cost me a little bit less. So I'm not going to. So what I mean is it's the point of why capital moves. So you're like, wow, there's lower wages and maybe because of low productivity, people aren't doing anything. Okay. Blame the Russians. So anyway, so you're like, well, I would like to invest into the Ukraine because I can do it and get a high return. Right? So I'm just saying, like, if everyone was the same, then there would be no need. I would just hoard my money for myself. I'd hire my neighbor. But he doesn't want to work and he doesn't need the money. So it should go. There should be differences. Like, Greece is not Germany. Right? Like, wages should be different. Government spending should be different. Taxes should be different because the economy is different. The people are different. The everything, it's not the same. Why would you want the same? But now we're getting into the socialist pig dog stuff where, you know, one day someone's going to kick down your door, shave your head, throw you into a factory, and you're like, everybody makes $1 a day now. Okay? I don't like that. I don't like that a lot. So there's a difference. Okay? There's a difference. You want the change. So for example, if everything was the same, if we had one global currency, then we wouldn't need foreign exchange. And there'd be no incentive to invest where there's lower productivity. Why? You don't get to keep any reward. Okay? So anyways, difference. Okay? What I fight for is equal access or equality, right? Not everyone is the same, not every country is the same, not every, you want the differences, so you say, I want to invest here. I want my money to flow there. And it just makes sense. So so I don't know. It doesn't make any sense if you did the model. By the way, thank you, Maida. 3 spoons of coffee, 1 cup of sugar, 1 cup of water. Yeah. Yeah, I'd skip the sugar, that's all. Mr. Kennedy says, in Greece, they pride themselves on how little they have to work, which is absolutely, totally okay. Okay? Unless the government has to hand out money so that they can afford to not work, then that sucks. Okay? But if they don't want to work, who's to say that that's not better? Working 70 hours a week so you can sell, routers that are 5% more efficient, and you have to play that politics game in your office, hustling, and you take 1 day off for, 2 days off for Christmas and 3 days off in the summer, right? You're like, Who's to say that that's better? Well, you make a lot of money. Yeah, but you work all the time, so you can't even spend all the money, right? Well, when you get home, you have a bigger TV. Okay, who cares, right? I'm not saying capitalism. Well, capitalism will always lead you to wherever you want to go, right? So if you only want to work 20 hours a week, why would I laugh at you for that? And you're like, oh, and I want to live in a tiny house that doesn't need much maintenance. Why would I laugh at you about that? Oh, well, my house is ginormous. Yeah, well, it costs a lot to maintain it. It's stupid, right? Right? You wouldn't believe how much I have to spend on energy in this house. So one of the things I'm doing right now is I'm lowering the ceilings in my great room to only 4 meters. And everyone's like, why are you doing that? It's so crazy. You're lowering your ceilings. I'm like, it's 4 meters. They're not low ceilings. You don't have to duck. But the thing is, I can spend less energy, right? My point is, it's stupid. Why would you have 6 meter tall ceilings in a room? You're like, it's unbelievable how much I have to spend on air conditioning, right? It's so stupid. So I wouldn't laugh at someone that like lived in a houseboat, right? Lived in a houseboat. You wouldn't want to raise kids like that, but if it's you and your lover and you live on a houseboat and every morning you sit out with the sparkling water on your face and you're having a cup of coffee and you say to yourself, yeah, it's 1,200 square feet, but I'm happy. Okay? So if you only want to work 20 hours a week, but you live in a small place, but you have lots of time to enjoy life and you have flowers in your backyard, you have coffee in the morning and with no stress and you don't commute because all you do is you trade Forex for a couple of hours a day on a laptop, what am I going to do? Laugh at you? Right? Get up, right? What I would laugh. This is what we do, right? Kennedy, you can rough it down to yards. So you should know there's 3 feet in a yard. So you're like 12 feet, right? Get up, giddy up, giddy up. All right. So, bigger's not better. Working more is not better. Right? Yeah, Dr. Age would live in a forest. Yeah, absolutely. Beautiful. But this is what Forex trading is going to do. You're going to actually work less. If you think that the only way to trade Forex is to sit in front of your charts, 8, 10, 12. Oh, Wayne, he works all the time. I don't sit in front of my charts all the time. That's not what the Wayne do. I used to do that, by the way. I've sat for, I think 36 hours straight was probably the longest of just trading nonstop. But I matured. So I spend most of my time doing research and thought and analysis, right? You're going to spend more time managing your clients and raising money than you will actually trading, okay? Because you're going to have better analysis. So I think what will happen, right, going back to the person that says, oh, well, the Greek people pride themselves in how little they work. I'm not going to pay you by the hour if you work for me. Right, Mr. Kennedy? Oh, I worked 200 hours this week. You owe me more money because Gary only worked 20, so I should earn 10 times more money. No, Gary will probably make more money than you. Right? What did Gary do all day? Well, he knows how to live. You wake up in the morning, you go to the beach. Then you have breakfast, go back to the beach. Have lunch, go back to the beach, right? Although I have a feeling Gary would love to get off the beach. Gary wants to go skiing in Switzerland, right? Something like that. And the Swiss, they want to go to the beach. But my point is, working more is a big part of the American culture. You got to hustle. But it's also because America has never had, for a very long time, I guess since Roosevelt created income taxes, right? Hasn't had an aristocratic class. So most Americans come from, people that worked in the factory or fought in the war and, rah, right? Strong and take pride on building with my own hands, right? I rebuilt this Mustang with my own hands, right? But then I've met people in England that they don't even think that way. They can't even think. They don't know how to think that way. And it's really interesting to somehow combine it where, as a currency trader, you get paid to make good decisions. And you could work, I'm not joking, you could have a Forex career and work less than an hour a week. I honestly believe that's true. I could even tell you which hour you should work. The rest is then, if you can't do that, you're going to have problems. You can do that and then add whatever you want to do, right? But I'm telling you, you're going to get to a point where most of how you earn money will be you sitting and thinking. And then being at your charts the 1 hour a week you're supposed to do something. Okay? Right? So again, working a lot might be a sign of poverty. You should have a lot of money and have your money work for you a lot. Okay? Your money should be working for you. In that case, you should invest it wisely. All right, so let's move on. So here we are at 36, man. Right? So Mr. Kennedy is going to learn how to trade really well, start a fund, move to Greece, and pride himself on not working much, but making really wise, well thought out decisions. Lovely. John, it's in the courses. Just take the courses and you'll learn all these things. All right. Let's just start here. Dollars weak. A little pop in the yen. Swissie's weak. So that's good. That's good. That's good. CAD's weak. That sucks. Kiwi weak. That sucks. Pound just dropped off the face of the earth. That sucks. Aussie sucks. And Euro is just the anti-everything. So I don't have anything to do today. Still waiting, right? Mr. Kennedy, that female CEO. Yeah. That female CEO of Yahoo, right? Melissa, I think her name was. She used to work at Google, and one of her jobs was to make the graphics. If it was 4th of July, you'd go to google.com, and right above the search bar, it would be like Google with 4th of July fireworks in the background. And that was part of her job. I'm like, really? That's somebody's job? You're like, why do we even need it? But like, I'm going to still search on Google no matter what that was. But anyways. I know people that were very early employees. So I used to speak at Yahoo. I've been in the Yahoo offices doing training, not like taking training, giving training. And one of the early employees was the guy that invited me in. And yeah, anyways, he did well for himself. You imagine Yahoo when Yahoo was Yahoo, and you're like, Google, do you use Ask Jeeves? Do you guys remember Ask Jeeves? There was let me give you a history of the entire world here. Why is Google worth $1 billion? Because they sell advertising, but they're so nerdy and so geeky and so self-involved with their nerdiness that they think it has to do with their algorithm. And I know the guy that works on the algorithm. They hired him. They paid him millions and millions and millions of dollars, so because he's one of the smartest guys ever. But anyways, besides that point, they think they're geniuses. What they don't understand is they're an advertising company. They just don't get it. They're like, no, it's the algorithm. It works so good. I'm like, dude, you can't find anything useful on YouTube. It sucks. YouTube sucks. Their search sucks. Google sucks. but I'll still use Google search, but it's not very good. And don't tell me it's an algorithm. It's just crap. Right? So anyways, there was a company called GoTo.com. And they said, you know what? Let's try to monetize this thing. Let's be the first search engine that monetizes. So what we'll say is, to get your website listed higher up in the rankings, we'll use like an auction. And the highest bidder will get the first listing. The second highest will get the second listing. And then we'll list everything else organically. Does that sound familiar? And they were actually profitable. But it was one of 1,000 other search engines. But Google's like, let's just buy it. So they bought it. If they hadn't have done that, they'd be worthless. You wouldn't be using Google today because they'd have no money. You got no money, you got no car, you got no woman, and there you are. So they bought this little thing called GoTo.com. And that's that. If AOL bought it, you'd still be using AOL. Amazing. Huh? Totally lucked out on that idea. All right. And by the way, if my friend Marcus is listening, I'm sorry that I said bad things about your algorithm. Okay. Remember talking about this? Okay. Isn't that cool? Let me remind you. Okay, let's go all the way back to, let's say, about April 20th. At April 20th, we already had the lowest low. We had already had the highest high. We just needed the close. But we knew pretty accurately that this number would be important. Do you guys remember targeting 14? Like maybe even 2 months ago? Okay. My point is it's predictable. Remember, you don't know the future, but there are probabilities at play. And the reason I use the tools I use is, like, check this out. Okay. Was 1398.14 important? I mean, that's unbelievably accurate, right? Look at. And we knew this weeks ago. Isn't that cool? Okay, my point isn't that, you know, I'm good or something. My point is I'm trying to get you to build trust in the tools that you use. How the hell could that be the number? Well, it is the number, and that's what matters. And that maybe it's the number because other people are also anticipating the same thing, which means if you don't know, okay, if you didn't know this, I'm trying to get my mouse to work, it's having problems. Okay, if you didn't know this almost a month ago now, I guess it's the 19th, so we're talking about, a month ago. if you didn't have a reasonable idea of that, let's say at least a couple of weeks ago, 2 or 3 weeks ago, maybe it's a major reason you haven't achieved the results that you would like. You understand that? Like if you say, well, gee whiz, if we knew that number almost a month ago and we hit 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, right? On a 4-hour chart. Those are 4-hour candles. Okay. Remember, I exited in here, right? You remember that, guys? This giant candle here? I exited. Took 500 pips profit. Turned $100 into $500. Cool. Amazing, right? So if you don't know these things, I think it's going to be very difficult because it seems that other people know this too. And that's the most important thing that you should understand about technical analysis is it's a self-fulfilling prophecy. If everybody thinks that's the number, then it is the number. Why? Because everybody thinks it's the number. Everything else is irrelevant. Yeah. Okay. Yeah, Mr. Kennedy, it's surprising how much Harvard still teaches outdated models that don't make any sense anymore. And how many wealth managers are like, you should be 60% stocks and 40% bonds. Why? It offers diversification. Yeah, but for the last 10 years, if the stock market's going down, right? Like, I don't know. It's just, I don't know. It's an old model that worked for your grandpa and doesn't make any sense anymore. And they still teach things like CAPM, which is a model for pricing the value of a stock. And they treat it like Coca-Cola in 1960. And in the stock market in 1960 and 1950, stocks behaved like bonds. They were literally bonds. You bought something and held it for your entire life. Do you guys remember that when your great grandpa gave you Coca-Cola stock you bought for 8 cents 58 years ago, and now he's dead and they transferred to you? And why did they make these investments if they weren't going to flip it and make 50%? What was the point? The dividend. You're like, wait, like collecting a coupon on a bond? Yeah, that's how the stock market was. They were very, 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 very similar. So you just simply bought Ford Motor or Coca-Cola or Sears, and you sat on it your whole life. That was the Nifty 50. And you collected dividend payments. And if the stock went up, you're like, really? I mean, it's just strange. And yet they teach these outdated models. Okay. Wayne Peccary says, Wayne, is it true that actual money which moves the market is dumb money? I don't think that makes sense. Okay. I think dumb money sees, for example, that we were here and now making a higher high. So what do they do next? They buy it. I think they see this and it's up for 3 days, so they buy it. Okay? And then it's down for 3 days, so they sell it. Right? I think they're always doing the wrong thing at the wrong time. Okay? And a lot of it is technical analysis, right? When you're pure technician, you're going to buy this. Because you're mostly right, but completely wrong. You're right technically if you did technical analysis, a kickoff of here and a grab of a roll reversal, you're like, Wayne, you do that all the time. Yeah, in an uptrend. Or with seasonality. So I did it in April on a lot of things because I'm using seasonality. So I'm using sort of forward guidance to make these decisions. If you're a pure technician, you could have bought that and lost money. Okay. My saving grace is, I've made a decision here. And what it does is it looks at all my opportunities, and any opportunity on this that says buy, I ignore. Okay. So do I like double bottom, higher high, higher low at roll reversals? Oh, I love them. But in this case, my bias supersedes my technical analysis. So I'm like, wow, that looks good. Pass. And in fact, what it does is say, okay, this is my sell zone for the month of May. Okay. Do you guys remember me shorting there? Do you guys remember I had a short there? I shorted it there. Why? It's my plan, dude. Like, why the hell would I not sell that? How many people remember I had a trade on that? At that exact price? Anybody remember? That was, I took the trade probably May 1st. Anybody? Okay. Yeah. And where did I exit? Right here. Okay. Okay. And I'll continue to do this for several years. Why did I get out at 14, Johnny? Because I said I would, right? When? Way up here we were talking 14. Okay? Because I think I had one at 15, targeting 14. And then I think if you go even farther back, I have another one. Yeah, it's 15 and a quarter or something, right? So, whatever. Cool. It's neat. Well, it's more than just the monthly profit zone, but that is definitely part of it, right? What else went into this? In the training course, do you see the plug there? Wink, wink, nudge, nudge. When you see this in the training course, you know to take profit. It's just part of the strategy. Anyone would look at that and say, oh my God. You hit the target on May 7th? Give me my money. So I only took 500 pips. I left this one. I left that. Okay. But I took this one because it was just a boring May trade. So tell me, if in 7 days, think of it as like a game show or something. You earned the full amount you expect to be paid for the month. Okay? So you expect to make, let's say, the 500 pips in 30 days. Okay. Let's say 500 pips equals 30 days. Okay. So that's a 330D. Okay. All right. Now on day 7, you're given a choice. You can take the 500 pips and have the rest of the month off. You can do whatever you want. You're not going to make any more money. You're not going to lose any more money. They will buy you out right now. $500 for you, right? You have $100 in. Somebody comes up to you and says, okay, you have to choose. You keep trading for the rest of the month, or we give you your money back plus 500 more. And you can take the rest of the month off. Go sit on the beach with Gary. St. Lucia's beautiful. Gary's beautiful. So $500 is beautiful. So you take that and you either cash out or you keep trading. In that case, I took the 500. I was done because I didn't expect to make more money than that. Hang on, my phone is now buzzing. It better not be the Goldang workers. Nope, my village is being attacked. Well, that's terrible. All right. So anyways, you get the point. In that situation, I understand that the market is offering me to pay me for the full 30 days to leave, to stop trading. So I did. Now the other one, I'm in it for longer, right? So that's that. Rick says, I'll just keep collecting the swap. But, the swap ultimately isn't that big of a deal. All right, so I got 1,300 pips right now. Oops. I'm trying to move this. Come out. So I've been in this now since March, and I made $28. But I'm up 900. So I wouldn't stay in because I might get this to $30. Okay. So you got to remember at that time I made $500 in a week on a $100 investment, and I was probably up, I don't know, $2. So I'm not going to give up 500 in potential cash in my pocket to stay in something that pays me $2 a week or whatever it is, right? It's actually more than that, but I think you get the point. Hey, it certainly is a reason, right? But yeah, it's certainly a reason, but it wouldn't be the reason. All right. Okay. Let's talk about profit taking. Let's do some of these. Let's change this to Confluence. Okay. What do you think of that? The whole self-fulfilling prophecy. Now, here's something interesting for those that are learning to be better technicians. This top predicts this bottom. Isn't that cool? Once again, that's straight out of the training course. An R1 predicts an S1, and we call that an inside, in this case, inside week. But the inside week occurred right after you should have taken profit as a bull and walked away. Okay, now let's do some forward guidance. Okay, this as a bottom predicts R2. Okay, oh, is that right, Darko? That's cool, man. Okay, here's the thing. In my mind, We don't hit R2 this month. Okay? Let me ask you a question. This is going to require you to respond. Did I tell you May was going to be up, 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 down, 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 or sideways, 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 sideways? How did I describe the month last month? Anybody? Type in a question mark if you don't know. Very cool. Thank you for answering. I said sideways. So, hitting an R2 is a trend. Okay? That's a trend trade. That's our extreme. That ain't going to happen if it's sideways. By definition, if it's way up there, it's not sideways, it's trending. Okay? So I think you're pretty lucky to hit M4, to be quite frank. You should be happy. Anything over R1 is awesome free money. But dude, you should know, right? If you're hitting targets on the 7th, dude. Okay, dude. Okay, cool. Anyways, yen's ripper strong. Okay, we expected this. Everything's fine. Take a look at dollar. Dollar strong, dollar strong, dollar strong, dollar strong. But you know, when you look at things like euro dollar, for example, this red means to get out. So who cares? All right. Okay. Check this out. This says get out. This says get out. And it's coming down. Really? This says up. This says get out. So I don't think any of it should be surprising. If you didn't make the decision at that moment, then you're paying the consequence, and now you have decisions to be made. What's the right decision? Well, not making a decision isn't the right decision. Okay? Okay? All right. Cool. So let's go to Biddy, just because it's funny. Biddy, 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 can't you see? Sometimes your words just hypnotize me. Cool, man. And you don't think it's Elon Musk dumping it, huh? Classic example of the pivots catching up. Very cool. So you're going to buy it at 30 now? Yeah, you know, I don't know. Like, you can do stuff like this if you wanted. I would just play the psych levels. If you were going to buy this, okay, if you were going to buy this as, you know, a scalp up, yeah, you should have done it at 30, right? I'd be playing the psych levels. There's Gary. You can buy that. I don't see a problem buying it at 30. 27 doesn't make a lot of sense to me. I don't know how you got that number. I mean, what are you doing this? I guess pulling it off that number. Yeah, if you do it that way, I suppose. Sure. I'd just play the psych level. I would do 30. I would do 25. You got to remember, most people are not that smart to like, oh, well, if you run a fib off of that. Fibs are subjective. Everybody sees 30. Everybody sees 25. Everybody sees 20. I wouldn't say Elon is a liar. I think he believes most people are stupid, and he's smart. There's no doubt about it. And yeah, I don't see why you wouldn't think that way. Average normal people compared to Elon Musk are stupid. I've always said, like, being a genius like Einstein would have been incredibly lonely, because all the idiot PhDs all said that he was crazy, that his theories were stupid and nuts and made no sense. He couldn't even do his own math. He had to hire a math person to do his math for him because he could see the universe. He could actually see the space-time continuum. And he knew how the universe worked. Even though every textbook said he was wrong, every PhD, every major educational institution teaching physics said he was wrong. And now we use his calculations on satellites to make sure the time for the satellite is equal to time on Earth. And by the way, if you think your GPS in your car tells you where on Earth you are, you're wrong. It's not even calculating that. It's calculating the difference in time between your car. Where's your car in space-time relative to the time for where the satellite is in space? It's measuring time, not how fast you're going. No, we're not talking speed times acceleration, over a certain distance, No, where in space-time you are, right? So it's pretty amazing. So imagine how lonely it is if everybody says you're an idiot. Meanwhile, they're all wrong. And that they're just rehashing other people's textbook, rehashing other people's research. They're not even thinking for themselves. Meta. Right? So, I don't know. So I think he probably doesn't care about average people. They're just, an average is so low, right? Who cares? You're like, oh, I stepped on an ant today. Yeah. Oh, look, I made a whole bunch of people buy Bitcoin. I made another $100 million. Yeah, cool. Sell it. Idiots, right? That's probably what he thinks. Isn't Peter Schiff the guy that always talks about the end of the world? He predicted 9 out of the last 3 recessions. Okay. So it's now up a couple of $1,000. Okay. So again, I would say 30, I'd say 25, using nothing more than psychological levels. Okay. I don't know anything about Peter, but most likely gurus get trapped and very often I don't think it's intentional, but what happens is as you compete for a guru, you get more and more inside of a thesis. and then your thesis becomes your identity, and people come to you because they think it's the end of the world and the stock market can't go any higher, and that the Fed is creating too much money, the federal government is spending too much money, and it's all coming to an end. And then they're like, they do a Google search and like, oh, Peter Schiff. Oh, I like him. He's smart. And all of a sudden, you get caught up in that. And then Peter Schiff's like, wow, I'm making $3 million a year selling books and doing speaking engagements because everybody wants me to tell them it's the end of the world. And he's like, well, 3 million's a pretty good gig. I get to go on TV. I get to speak at conferences. I get to travel the world, and I get to live a pretty decent lifestyle. And this is what people want to hear. So this is, I said something and it connected, and there you go. Right? And I don't think it would have been intentional. I bet you it just sort of happened. The market responded and stimulated, and then he responded, and, and now you have a living, breathing organism, a community. Okay? Okay? I myself try to stay away from preaching a philosophy to you guys, except for I want you to think of trading as a business. I want you to do your own research and listen to no one. Right? I want you to have conviction from the research so that you make clear decisions. And then you do it on your own. I'm trying to make you independent. Okay? Okay? So, if I'm a guru that tells you you don't need a guru. Okay? But it's a hard pitch because people want a guru. Is anybody here Christian? Uh-oh, I better be careful. What did Jesus say? And I'm not trying to be offensive. I'm trying to use an example of how humans want gurus or whatnot. I'm not saying Jesus was a guru, okay? But imagine Jesus was the Son of God. Let's just say that that's truth, okay? I'm not here to say it is or it isn't. Let's just, for the sake of argument, say it's truth. Okay, great. What was his message when he talked to the people on the mountain? Not on the mountain, well, on the hill, right, or whatever. What he was speaking. And I'm pretty sure, if I'm wrong, don't get mad at me, and I will just leave it at that. I'm not here to make an argument that way. But I'm pretty sure he said, you don't need a church. You don't need to talk through an elder. You don't need to be inside of a temple. You don't have to sacrifice animals. You don't have to build a statue out of gold. You can be on a hill just out in the sunshine, and you can talk to God directly. Does anyone believe that to be true? I really don't know. But that's my understanding. That was Moses? Okay. All right. All right, well then that's that. Okay. So if it's true, my point is then why do we have Christian churches that worship Jesus if Jesus said that? So my point is it's the community aspect is important to the human experience. Okay? There's a need for the human experience. Even if you don't need the church, you build a church because you need a church so that you can discuss the guy that says you don't need a church. So, right? So I'm a guru that says you don't need a guru, but I have a community and we help each other. But I'm not the one to say I'm a perfect trader. And the method and means that I use is the only one that works. In fact, we could have 100 traders using 100 different techniques, but we're all likely to make money. And that's the part that I preach. Okay? Okay? Russell says they need the rituals too. And yeah, like, for example, the stuff that we do at FX Bootcamp, I think is just generally fun and interesting, and it's good to gather as people. Right? Keeps us focused, keeps us on time, that kind of stuff. All right, now, so it's up 4,000 now. Interesting. Very nice. Cool. I wanted to show outs. Let's take a look at this, for example. Here's another in, and here's another out. Does that look accurate to you? If you saw this was this accurate on a regular basis, would you consider using this tool? Because remember, the tool is just doing mathematical calculations for you. It's not suggesting anything. It's just doing the math for you and displaying the math that might be easily interpreted. You can look at this with the spreadsheet and not understand it, but then we put colors and stuff and symbols, and you're like, oh, that's interesting. So if I could show you something like this on a regular basis, that a pattern like this occurs on a regular basis, or the math is reasonably reliable, would you use the tool that does the math for you? Yes or no? Well, Mr. Kennedy, if the dollar's ripper strong right now, then you're getting your ass whooped. So you better do something about it. Okay, so the previous month we went from here to here. Okay, so this month we went from here to here. Well, that's pretty good. That's 2 in a row. That ain't bad. We can look at Kiwi. No, Kiwi's been very unproductive relative to the other currency, which was euro. Okay. But that's not a shocker either. To be quite frank, that one is to be expected. All right, so let's take a look at pound. Okay. What time frame is this? I guess these are daily trades, right? Trade. Notice this took you out and you need to stop. Do you see this? you would have bought here and you're out now. Okay. Anyways, let's change this because this is the pattern that we were looking at. Let's change this to bullish. Okay. What does this line represent? I'm not even showing you the entry. I'm not even showing you the price. Just what does it represent? Anybody? No, not a role reversal. I'll give you a hint. That was drawn 19 days ago. Not a double top, not a role reversal. It was I didn't draw that. 19 days ago, the algorithm put it there. It's not support. 19 days ago, our algorithm said 154.34. It says out. It's not a daily 200 EMA, no nothing. This line says out. Do you remember that tool I just said that drew patterns for you? And I said if it worked in a reliable fashion, would you use the tool? You said yeah. Okay. So you took profit here on the 12th. What have you been doing since then? I was doing my nails. Decided to research amusement parks with roller coasters and when they're going to open. I've been studying to be a docent at the local museum for blind artists. By the way, you should ask Google, because of this. I did this the other day. I said, "Hey Google, play music for deaf people," and she actually played something, which was pretty funny. Right, the Museum of Modern Art for Blind People. Anyways, it just that's what like you're not trading anymore. None of this exists to somebody that took profit. And you knew, and when I say 19 days ago, this was set in stone, but you knew roughly where it was going to be well before that. So imagine 25 days ago, you said, well, if I can get the pound yen up to 154.34, I'm out. Take the rest of the month off. Okay, so now we go here. I think this is probably the 5th currency now. 5th. Where we see a green long and an early out. This is why I want you to start with swing trading. Okay? If you don't know how to swing trade, you're going to be severely hindered to have consistent returns. Now, the thing is, let's say you prefer day trading and scalping. I have no problem with that. But I would call this strategy, and then everything else is tactics, which I love tactics. Kick down the door. Sir, yes, sir. May I kick down another door, sir? You're like, dude, you like the tactics? Yeah, kick down another door. Sir, thank you, sir. You're like, dude, this guy's nuts. He wants to kick every door down. Psh, you go in first, dude. You first. After you. Okay? So imagine you had strategy. And by the way, my book is called Strategic and Tactical Forex Trading. Now, you might say, Wayne, I already know that. You've told us a million times what your book is called. Well, I had a former employee who worked for me for several years. And then on his website, when he went out and made his own business, he said he came up with this novel idea that combines strategy with tactics. And I'm like, dude, seriously? Like, do you not remember? Like, do you not remember? Like, that's the name of my book. I thought it was funny. But he's a guy, before I hired him, he was a boot camper. And he sat down and he's like, Wayne, I fly more than 1 million miles a year. I'm on the road 27 days out of 30. He's like, I just want to have a regular life. I want to come home to an apartment that feels like it's mine. I don't want to eat in restaurants anymore. I want to cook my own food. I want to have a girlfriend or a wife, maybe a family. I want to just have a normal, regular life. And I think Forex is going to help me. Okay? And sure enough, he doesn't travel like that anymore. And his last real gig was Forex. I don't know what he does now. I think he snowboards with his children. Do you understand how awesome that is? Okay? I don't know if he's a billionaire, but he's happy. John says, hey, is the book like taking the course? So there's, I don't know, what is there, a dozen courses at FX Bootcamp? One of them essentially covers the book. Right? Yeah, Lucas. Yeah, Rob. Kiwi Rob. Yeah, great guy. I think he was pissed off at me at the end, but still a nice dude. But anyways, right, when I had dinner with and by the way, we went to this great place in LA, and I'm like, hey man, let's go out for dinner. So we go to this Michelin star restaurant at the top of some hill somewhere, and we walk in, and the waiter comes right up to us. Welcome to Chez whatever, Chez Le Pied. Welcome to, gentlemen, welcome to Chez Le Pied. Chef Bubbly Boo is going to make this 12-course meal with wine pairings. And there are no exceptions, no substitutions. That is it. Like, it's great. I don't know why he goes from French to German. But anyways, it was like, that was like, we're going to serve this crap and we don't care if you want it or not. By the way, it's $1 million to eat here. So Rob and I went there, and the two of us, right, we ended up having like, I think there was like 20 empty wine glasses on the table. And they're like, one of the meals they served, or one of the little bites they served was pigeon. I'm like, oh, nice. Sewer rats, right? Costs $1,000 to eat sewer rats. You know the place is good. But anyways, getting to know Rob was great. And we had dinner a time earlier too, probably a year before that. And, where he laid it out, like those were his goals. And I know the Forex led to that. Okay. Yeah, Russell says, swing trading taught you how to exit your trades, right? Well, it's interesting. Like, entering and exits are very similar to me, because you're exiting where someone else is entering. It's a key point Like, let everybody think about this for a second. If you're entering where other people are exiting and you're exiting where other people are entering, those are the definitions of turns, right? Tops and bottoms, for example. And it makes sense. The market is now being efficient. You want to unload and someone wants to get in and they're like, oh, great. Because someone's thinking about it like, I want to buy, but I need a seller to sell me my position. So you're like, well, I'll sell you a position. And now there's a good exchange, right? And there's going to be a lot of liquidity. Your spreads are going to be most narrow where there's lots of buyers and sellers that want to transact with each other. It's where you're in the middle here where you want to buy, but no one else is selling anymore. Like, dude, you were supposed to buy down here. You're like, well, I didn't know it was going to go up. Well, then how the hell do you know what you're doing, right? And then once it's up here, you want to buy it, and you're like, but there's no, what do you mean, right? Like, you're always paying too much. Your spreads are always going to be high. You're way late. You're asking to do something the market doesn't actually want to do. Okay? So you're supposed to be unloading. A bull is trading sides, right? Selling their positions to seller. They're basically buying them out short, right? So like, can you imagine being up at resistance and then you're asking the market, sell me a position, but everyone else is like, but you're going the wrong way. So what'll happen is your spread will naturally widen because they have to like reach out further because you're doing something so stupid, right? Like, think about it, right? You're doing something so stupid. The market has trouble helping you do it. They're like, what do you mean? You want to buy it at 154, 34 and a half. You're like, yeah, I want to get in now. They're like, well, everyone's going short and everyone in is getting out. Like they're moving it over to the bears. And you're like, but I want to buy. Well, dude, right? There's problems, right? And same thing, right? You're trying to sell when everyone's buying and then you're trying to buy when everybody's selling. And it's just like it's weird. It's just weird. And the market doesn't really know what to do with you. Right? Okay. Yeah, 88's like, hey, the moon phase indicator. But you know what? It probably works, okay? It probably works fairly well because of seasonality. And we know the seasons on Earth and at least tides are impacted by the lunar cycle, okay? So that probably has something to do with seasonality. It's probably not as far-fetched. Plus, doesn't the Fed meet during every new moon or something, right? Like the Fed meets, 8 times a year? And you're like, 8 times a year? Why don't you meet every month? No, we want to meet, every 1.3725 times, every 1.3725 months. You're like, that is weird. Like, right? Why don't you just meet every 15th? Oh, that's too many. So it's weird. Like there's probably somewhat on a lunar cycle. So I might say, look, these Fed meetings are important. It just might be the lunar cycle. I don't know. Right? Okay. So I'm not here to say that it won't work either. The thing is, whatever you use as your biases, right? Whatever tools you use to create opinions, just be really good at it. It's the mediocrity that really sucks beyond belief, where you're in the middle doing everything late because you don't know what's going on and you don't have an opinion. So the pound's falling and you don't realize if you're a bull, this is fantastic. You love the fact it's coming down because you want to buy it. Meanwhile, someone else is just like trading this up and down, and they might have made 100 pips and then gave back 30, and they're just all over the place. I'm like, what are you doing? And I don't know. I'm just trying to make a bunch of money quick. And of course, it's stupid. Okay. Okay. I'd rather you just like pick your lines. Are you a bull? Why would you be a bull? Why? The market's over now? Check this out, fellas, ladies and germs. Even though the market is moving fast and Bitcoin is crashing and it's the end of the world, this is the worst May, and we expected all of this in May. I've been cheering as the stock market goes down. I have a plan. I love it. This is making me so happy. Now, when we look at this and we see red happening here, and people are reacting like the sky is falling. Oh my God, look how hard pound is coming down. If you didn't expect that, you're not planning properly. What you're telling me is you didn't understand in advance 25 days ago that something like this was very likely to happen. We don't know exactly at what price, and we don't exactly know what day or what hour, but this is understandable and predictable. And if you're getting whooped because of that, you're not on the clue train. You're still dumb money, as somebody else said earlier. You're not doing the research. You're not doing the preparation. You're not doing the work. Dude, that is nothing but a swing. Like, there is nothing to that. And if you don't understand that, I would suggest you now start focusing on learning why and how the markets work. And then you can go back to your short-term, scalping and day trading stuff, and you'll be phenomenal at it. Okay? Okay? So the velocity of this move is surprising. But if you had a buy order somewhere around, 154, you're in, dude. You're good. You got it. You know it's good. Okay? Now, are you a bear? Okay? I'd get ready in here somewhere. Here and here. This is what I'd do if I was a bear. Or Okay? But really? It came down, hit 54 and jumped? Really? Wow, that's shocking. That's crazy. Okay, let's change this to weekly. There's the buy zone, son. You are not alone. Da, 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 da. Okay, you can do it this way, by the way, or you can do it that way. Okay. Very often, what you do is let me see. I can't zoom in now. I guess we'll do it this way. That's really Friday, but I'm going to throw it in there. From this pivot to the current zone. So last week's low, okay? Or really, I'm supposed to do it this way. That's the first wick of this candle, right? So some bulls would think like this. Okay. What we're measuring on the right here, what we're saying is this is looking at the current high plus the current low divided by 2 with an assumption of the current price being the close, which is actually then divided by 3. If it closed right here. Okay. So it can move this up and down because we haven't closed yet. Okay. At the end of the day, we'll know that number. Monday, Tuesday, Wednesday. Okay. So you could use a different tool to kind of try to create something similar. It's not going to be the same, but it might be similar. Okay. Okay. Next week, we're projecting to go to 155. The Princess of Yen. Yeah, I think you mentioned that one before, Marina. I'll have to look into that one. Well, William says he took a short on Bitcoin with the demo. The thing with technical analysis is that it wouldn't have predicted the velocity. Okay? It would say, and by the way, if you sold here, that was a bad trade, I think. But if you sold up here, that makes sense. But it, right? Like this technical analysis here says if you short here, you should exit here. Okay. If you shorted here, that's not a good trade in my opinion. Now you made money, but most of the time you won't. So, but nonetheless, all this really says is down. What created the down was more news / fundamentals. So China's cracking down on Bitcoin and all that kind of stuff. There's lots of nodes, right? So it's just this market has changed since last month. Okay. So I'd be careful on the technical side explaining this. I mean, technically what we see is the high with the lower low, which produces the lower high. Okay. This is a monthly swing. This is a weekly swing. And then this is everyone getting stopped out. And remember, one of the questions I have is, are there really sellers? Or is this profit taking and people getting knocked out because of stop losses? Like, I really don't know how much supply and demand, buying and selling there truly is versus everybody buying and then everybody getting knocked out. I'm not saying there's no sellers or real sellers. Are they actually borrowing the money and all that kind of stuff? Like, I all I'm saying is I don't know. But your technical trade, although it has worked out, doesn't predict that. And therefore, there is something else in play. The boring trade here for bears on Bitcoin, okay, is selling here somewhere and exit somewhere there. This other drop from 40,000 to 30,000 is not predicted by this technical analysis. Okay, so there's something else, and the technicals will have to adjust. Okay, we're now up $6,500. Okay, from that psych level. So pay attention to those things more than anything. So the reason I bring that up is not to slap you, William. It's more like I'm worried about the irrational exuberance. Like you just had a key takeaway. Okay, that's good. Setting the trade up in advance is good, but don't over believe it, right? Don't, right? In this case, you took a trade and it was good. What the outcome had nothing to do with your trade. In this case, it worked really, really, really well. Not because of you or how amazing your trade was or how good the strategy works. It something else occurred and it just, wow, worked out really well. But I always remind people, your job is to set up good trades from good research. But what happens next is not a consequence, really, of your greatness, but of what the market did later, right? Because we don't know how many people are actually going to buy. We don't know actually how many people are going to sell. We can only look at macroeconomics, technical analysis, put some theories together, confirm or deny these hypotheses. But what happens next comes down to probability, but it doesn't explain, like, is it going to go 1 standard deviation, 2 standard deviations, 3 standard deviations? Well, that all of that is dictated by what humans do after you've placed the trade. How far will it go? Well, it depends on what people do next. And your probabilities, your statistics won't predict that. Okay? Behavioral finance might predict that. Okay? Yeah, and you're right. The Exiles 100. Yeah, I don't like doing that, but it's the better way of doing it. Because my point, the Exiles 100, is that you wouldn't be buying or selling this now based on technical analysis, because that's not what is occurring. People aren't saying, oh my God, I need to buy this because what, it's next month's M2. Like, don't think that way. Are you waiting for a 5A cross? All this kind of stuff. Like, that's not what's happening here. The market is breaking. And the one thing that everybody sees, no matter who you are, is the next cycle level. Okay? That was my point. Not that it's a good buy. I wouldn't buy that. Okay? Okay? What I said was 30, and then the next one would be 25. Yeah. Yeah. Oh, my pleasure. Yeah. I don't like Hail Mary trading. I love boring, predictable trades because I'm not trying to make a lot of money. I'm trying to earn a return that has low volatility and is consistent. Man, my mouse is just not working. My mouse isn't working. Sorry. I'll just kind of scribble. All right. I'm trying to get a predictable, how about that? Predictable return with low volatility. And I guess predictable is the same as consistent. A predictable return with low volatility. So dropping a bomb here and hoping it goes up, that's not what the Wayne do. Someone else will do that. Someone else will make it. But they'll have higher volatility than me. Now, they might have higher returns than me, but that I don't care. That's irrelevant to me. I don't care what the hell other people do. Right? I'm trying to have consistent returns with low volatility because I know I can get bigger money. Okay? I'll leave the degenerate gambling for other people. They'll make a lot of money quickly, and then they'll lose a lot of money quickly. That's what happens when you're a degenerate gambler. Cool. So this is great. This is that rotation we've been hoping for, I think, like maybe. But this is good. So after these down days, so what I said, I don't know, 3-4 weeks ago, is in the second half of May, I'm going to start buying things like the stock market, right? That was one example. And so I have some dry powder. I've been buying stuff. By the way, even though the stock market's been down for 2 weeks, everything that I bought except for one thing is already profitable. So I've been buying the right things, maybe. But we've had another day or so that I think I haven't looked since last night. But in the next 2 weeks, I'd like to be buying stock. Right? We talked a bajillion times that May was going to bring the stock market down. Love it. Love it. Absolutely thrilled that it's been coming down. Cool. Hey, I'm heavily exposed to the stock market. Why am I thrilled by that? Well, because my end game needed this. Now I'm going to load the boat. Sweet. And at the end of the year, I'll be smiling ear to ear because my money made me more money. Now I'm going to have this problem. My taxes are going to go up. I'm going to have more cash. I'm going to have to invest more. Yeah. First world problems, as they say, right? Oh, dang it. Now I have too much money. How to assess a stock is good or bad? I have no idea. Okay? I'm a venture capitalist, or I used to be. So I think every CEO is a liar. And in fact, they're incentivized to lie. So I make macro decisions, and then I pick things I like. Is it good or bad? I have no idea. So I'll do some diversification. I bought some value. And I'm like, yeah, in 20 years, it'll be worth a lot more. 20 years! So I'm like, all right. So I bought some value, a couple of value plays. I bought some dividend plays. And I bought some highly speculative plays. And I'll probably do some more of that. Meaning, if I get it right, I'll make 300-400%. If I can't make 300 or 400%, I'm not really interested. There's not a lot of things you can buy right now like that. Okay? But I don't trade it like Forex, because then I'd be a stock trader. How boring is that? So this is just play money. I want you to think about it this way. I have a choice. I can be taxed on $3,333 every month. Or I can take it out of my company and pay myself, me. It goes from my company to my retirement account. So my company is being generous to me as an employee. And therefore, I'm not taxed on that money. Now, I can't spend the money. I can't buy myself an OLED TV. I can't put gas in the Porsche. But I have to invest it. And therefore, it's tax-free until I take it out of my investment account when I'm old. If I take it out now, I'm heavily, heavily, heavily taxed and fined, basically. But if I take it out when I'm 65 and a half? Might be 67 and a half now. So, in 30 years, this money I play with, I'll take it out. I'm like, oh, damn, it's up 1,000% in 30 years. Cool. Every $1,000 is now worth $1 million. Sweet. Okay. Now, if you do the math, I'm doing this as a tax strategy. Cool. So every month I can take out, the maximum is 3,333. Okay. Okay. That's the max. I take it out, I put it in the stock market, and I buy a bunch of stocks. But let's say over 30 years, I average 8% a year, which is like the 50-year historical average. Okay. I might as well just buy the S&P 500. That's cool, but I already got all that crap in my other retirement accounts. Cool. So this is just like for fun. I'm not paying taxes with it, so I'm investing it into the economy. Great. So I'm moving my steady state. Compounding at 8% a year on average, I will have millions of dollars. That's it. Just another way to retire a millionaire. It's nothing. It's boring. So the stock market's coming down. Okay, I'm going to buy. But I'm holding the stock for 30 years. So, like, is it going to go out of business in 8 years? Well, then I don't want to invest. Or I better get a high return. So I throw down some value. I'm buying some stuff for cheap that used to have intrinsic value, might regenerate the intrinsic value. And then there's some long shots like, whatever. Is this going to be a future industry or not? Yeah, maybe. Throw some money at it. But most of it is just really consistent, steady return kind of stuff. Because I know as long as I average 8% a year on this money, it's free money to me. I would have paid the government. You understand that? I would have just paid the government. So now I'm paying myself first. And because of that, that one account will have millions of dollars in it when I'm 30. Okay? What else could I do with the money? I can lease a Lamborghini. Will $3,333 a month get me a Lambo or a Ferrari? Yeah, probably. A pretty decent one? Yeah, it's probably enough. Except when I'm an old man, it'll be worthless. Okay? Okay? So why is it that old men buy fancy cars? Because when they both depreciate, they'll be worthless at the same time. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Thanks for being on my team. I love you, babe. Got to jump. It was real. Thank you, Traders Way. Adios.